Ever wondered why your neighbor with a bigger savings account seems to be earning more interest than you? It's not a secret club, it's a tiered interest rate system, and if you have an account with Patriot Bank, it's something you need to understand. Simply put, a tiered interest rate is a system where the interest rate you earn on your account balance changes based on how much money is in that account. So, the more money you have, the higher the rate you get. It's like a rewards program for your savings. Patriot Bank uses this model for some of its most popular accounts, including their money market and certain savings accounts. Here's a quick example to make it clear. Imagine Patriot Bank's money market account has a few tiers. Let's say, the first tier for balances up to $25,000 earns an APY of 0.5%. But then, the next tier, for balances between $50,000 and $100,000, jumps up to 1.25%. And if you're a high saver with over $250,000, you might be in a top tier earning 3%. See how the rate goes up as your balance grows? That's exactly how it works. Now, this is super important. The higher rate doesn't apply to your entire balance, it just applies to the portion of your money within that tier. So, if you have $60,000 in your account, the first $25,000 earns that lower rate, while the remaining $35,000 earns the higher tier rate. The bank is essentially rewarding you for each new level of savings you achieve. Why do banks do this? It's a way to attract and retain customers with larger balances. For you, it can be a great motivator to save more, because you can literally watch your money grow faster as you hit each new tier. It's a fantastic tool for anyone who wants to maximize their savings without locking their money away in a CD. The key is to know the tiers and aim to cross those thresholds. With that said, thanks for watching and until next time.